Every market, including the Forex market, experiences irregular sequential stages, which is called a cycle. And once the cycle is completed, the sequence is repeated over and over again. So your ability to understand and master these stages, this sequential stages called cycle, will keep you ahead in the game. So in this video, I'm going to explain the 4 phases of every cycle and how you can identify them. So here are the 4 stages of a market cycle. 1 is accumulation. The accumulation phase is an area that represents a period of intensive buying, typically by institutional traders. While the buying is going on, price remains fairly stable. At that stage, you experience a sideways price movement. Price seems to be in a range. And that is the phase where a trader will spot a good entry point before price begins to rise. So how do you know that a currency is being accumulated by institutional traders? You can identify this when you observe that price is unable to go below a certain price level in a downtrend. Rather, it starts moving in a range for an extended period of time. The result of this accumulation is a potential upward breakout. So the next phase is the markup phase. This is the phase that occurs immediately after the accumulation phase. After enough accumulation by the big institutional traders, the next stage is a breakout, which is called the markup stage. This is the stage where price will move up at a very high speed because bulls are in control, and the price is taking higher and higher, making higher highs and higher lows. Varies an upward breakout. And this markup phase will continue until either the bulls feel it's time for them to take a profit, they'll start selling off, or when the bears start getting more active to take control in the price to resist the price from moving further up. Now, if the bulls win, then the price will keep going further up. But if the bears win, then the price will likely do 2 things. Either the price falls sharply, which is very unlikely, or the price will start moving in a range. And that is the beginning of a new phase, which is the distribution phase. The distribution phase is that stage where all the instruments, all the currencies accumulated at a lower price are sold. This phase is marked with a price exhaustion. Price fails to break into higher prices. And at this stage, you also experience price moving in a range. Then after that, you have the final phase, which is called the markdown phase. The markdown phase occurs as a result of a downward breakout of the distribution range, and you experience price fall very sharply. And after the markdown phase, you will experience another accumulation, and then markup, then distribution, and markdown. And it continues that way. It's a cycle. These are the 4 phases of a market cycle. Let me show you on the chart. Down here at the left bottom, you have the accumulation phase. And after the accumulation phase, you have a breakout, and that breakout leads to this long bullish move. And after that, we experience a long time period of distribution phase. And after that, there is a markdown, and now we are in another accumulation stage. After this accumulation stage, the next that is expected is a markup phase. Then you experience another distribution and then another markdown. So I hope this video has helped you. Kindly subscribe to my channel and hit the like button. Thank you for watching.